Good morning, everyone. I just wanted to start off today by saying thank you to all of you for joining me for this webinar. I just wanted to take a minute to introduce myself for those of you who don't know. My name is Laura Johnson. I work here at Ryan on the Annuity team. So anytime you have questions or have a case you're working on the annuity side, feel free to give me a shout. I'm happy to help you out. Today we're going to dive in and look at a couple different products that are really good for income. You know, a lot of times we're talking to clients about wanting that lifetime income, but we're looking at a level income. On these ones that we're going to be looking at today, we're going to be looking at ones that have increasing income. So I'm going to start off by just starting off with just going through a couple intro slides just about IMES. I'll go through these kind of quickly. And if you have any questions, I'm just going to ask, since we are going to go through 3 products pretty quickly today, I'm going to ask that you hold off with your questions until following the webinar, and then I'll reach out to you guys individually following up after the webinar. So with that, we're going to go ahead and get started here. First thing I'm going to talk about today is our new producer bonus. So this is something that once you join IMES, you're eligible for. So you've got 180 days to qualify for this promotion. So when you first become, we call it our new producer bonus. So when you first join IMES, you've got 180 days to qualify. As you can see, there's 5 different tiers that you can qualify for: 100,000, 250, 500, 750, and $1 million. And as you can see, there's some great options there as far as earning some great assistance with marketing. So just want to start off by pointing out this is a great opportunity for us just to partner with you on your marketing off those first pieces of business you write with IMES. You know, for example, let's just say you did $250,000 of indexed annuity premium in your first 6 months, and you would qualify for a $3,000 postcard mailing, $200,000 in marketing reimbursement, $1,500 cash, or you know, some marketing collateral, which our creative team at IMES can help you with, which could be, you know, helping you with doing a newspaper ad or, you know, microsite, things like that. So it's just a good way for us to be able to, again, partner with you, give back a little and help you do sales. So if you're curious where you stand on this, you can give your marketer at IMES a call. They should be able to tell you if you did qualify, or if you're close to qualifying. Once you do cash this out, we do move you into a marketing reimbursement program. So for every $100,000 of annuity production you do, you get $100 marketing reimbursement. For every $100,000 in single premium of life, that would equal $200 in marketing reimbursement. And for every $10,000 of life target premium, it's $200 as well. So just a great way for us to, again, partner with you in those marketing expenses and help put money back in your pocket so you guys can stay in the field doing what you do best. As you all know, your business is built on referrals, and so is ours. So we do have a referred producer program as well. So when you refer an agent over to IMES and that agent gets contracted, that's $50 in your pocket. When they write their first piece of business, we're going to give you $100. And then going forward, all the business you write with IMES, or that referral writes with IMES, you're going to earn some 20 basis points on that business. So it's just a great way, again, for us to say thank you for that referral. So if you've got someone in mind, colleague of yours that may benefit from the services, give your marketer at IMES a call. Let them know the referrals information. We'll be happy to reach out, see what we can be doing to assist them as well. Here at IMES, as part of our name, Insurance Agency Marketing Service, we really hone in on that service part. We're not looking to be the biggest FMO out in the industry. We're trying to be number one when it comes to service. That means, first of all, starting off with answering the phone every time you call. If you've called IMES, you know that you never get an automated service unless you're calling at 10 o'clock at night. And you're always going to get a live person. The reason we do this, we're a little old school on this, but we want to make sure your questions get answered when you have them. You know, if you're leaving me a voicemail and I'm on an hour-long conference call and you've got an appointment in 30 minutes, the nice thing about that is you can call in and, hey, Laura's busy, but what can I do to help you? You know, really want to get those answers to you when you need them. We're going to help with case design, make sure you have all the forms you need, make sure you're compliant to write these products, really try to take as much of that on us, be your back office support so that you can stay in the field doing what you do best. We do have paperless contracting. We are insurance-based, so it's kind of industry leader when it comes to contracting solutions. So we're excited to have that partnership with SuranceBay. It makes it really easy to get appointed with carriers. And again, just trying to make it easy for you all to do business. One of my favorite departments that should be everyone's favorite departments, our creative department, and they're here to work for you. They're here to help you grow your business. Sean, Jacob, Russell, Chance, Ryan, they're all here designing things for our agents, whether it be websites, logos, doing social media campaigns. Maybe you're looking to do some drip email marketing. Maybe you're brand new to the business and you need a logo design. That's what our creative team's here for. They're here to help you grow your business. So I always say that our creative services teams are not, their work is not free, but it doesn't cost you anything if you're doing business with all your business with IMES. So, as long as you're hitting some tiers of production that can pretty much cover internally those costs for what their services are, we want to provide those for you. So, all of our guys who are writing their business with IMES, get access to this creative department. We really want to stand separate from other FMOs in that space and be willing to able to get those things out to you, knock out projects for you quickly and in a timely manner. If you haven't been out to our website, it's www.imesinc.com. A lot of great tools out on this website. I'm out on our website all the time. You can do a couple of my favorite things. I'm just going to highlight a couple favorites. Number one, we are now on Firelight. If you aren't familiar with Firelight in the annuity world, that's our e-app solution. So if you log into your IMES website, or the IMES website, you log in, you'll see we have a tab now for e-app solutions. Through that e-app solutions, you can do your annuity, life, and Medicare apps all online through our single sign-on through our website. So really quick access. Want it to be a one-stop shop where you can do everything you need through our website. You can run your own quotes out there on the life side. On the annuity side, we give you access to Annuity Rate Watch. It's probably one of my websites I go to the most in a day. When an agent calls me and says, hey, I got a 60-year-old who needs income at age 65, I'm going out to Annuity Rate Watch to see who's going to be the best fit. It compares everyone in the industry so that we can have intelligent conversations about what's going to be best for your client. You also have access to forms, our current annuity rate books out there, life rate books, just a lot of great resources. One of the other things that a lot of people use on our website is our sales resource library. I know I'm out there often using it. It's just a whole library of materials for you in the field. So it's going to have fact find, all sorts of, probably 50 different kind of fact finders. There's got a bunch of financial calculators. There's client presentations out there. So maybe you're talking with a client and they say, hey, what is an indexed annuity? Well, out in our sales resource library, there's actually a client presentation, probably a 10-page document explaining everything you need to know about an indexed annuity. What is a cap? What is a spread? What is the participation rate? How does an indexed annuity work? It answers all the questions. So some really great materials. If you've never been out for a website, or if you want a little tutorial of the website, I encourage you to give your marketer at IMES a call. They'd be happy to walk you through that. For those of you who don't know, we do have an RIA in our office as well, IMES Wealth Management. A couple of years ago when the DOL was kind of looming over our heads, Stephen Charles said it's time. And we started our own RIA. Charles Jr. does a great job with his team, working with our advisors. We've been in business now for about 3 years, really growing that side of the business as well. So, I always tell my agents, I think this is a really good key to have in your back pocket because, let's just say you go into a house and a client has $500,000. Well, if you've done any annuity business, one carrier is not going to take all the client's net worth and let you put in an annuity. So let's just say a carrier is only going to take $350,000. What are you going to do with that other $150,000? Because if you're not going to do something with it, that's just allowing another advisor to come in and potentially steal the client or potentially steal some of those assets. So I think it's a really good thing to have. So there's two things I'm going to mention with this. Number one, if you got your 65, your CFP, you can get registered with wealth management. The nice thing about that is you don't have FINRA anymore. If you're doing RIA space, you're cutting out FINRA. You're dealing with SEC now. That means when compliance wants to come knocking on someone's door, they're coming to knock on our door, not yours, So it's really a lot easier to do business working with an RIA versus working with a broker-dealer. And number two, if maybe you're studying for your exam or you're kind of debating if you really want to get it, we have a soliciting program available too. Whereas if you're kind of doing your studying or maybe you're kind of fading out of the business and you just want to keep that client in home base though, you can refer those clients over to wealth management. And then depending on the state you live in, there's a good possibility we could pay you a portion of that fee that is charged to the client as well. So we think that's a really great opportunity for those who are studying to build up that AUM. As soon as you pass your exam, we will transfer all those clients directly to you. So if you do want information on the wealth management platform and or our soliciting program, just go ahead and answer yes to the poll question that should have just popped up on the screen. All that's going to do is generate a phone call from Mike Hansen or Sarah in the wealth management team. They're just going to call, kind of give you an update on what their platform is, answer any questions you may have, and that's really what answering yes to that question is going to do. So we give you guys, if you guys could just answer that question pretty quickly, then we can move on. Alrighty. Next, we're going to talk about one of my favorite things to talk about. These are our life and annuity academies. So our life and annuity academies, unfortunately, thanks to COVID, we have not been able to do one yet this year, but we do have a couple that we're potentially looking to do toward the end of the year. As states start to loosen their requirements up and stuff, hopefully we'll be able to do one or two of these toward the end of the year. But what this is a great investment of your time. Giving up 2.5 days of your time to come out, rub elbows, not only with some home office folks and the folks here at IMES, but also with 40 other people in the industry who are out doing exactly what you're doing every day. We usually co-sponsor these with one of the home offices. We were supposed to do one here like last month with Athene. I know we had one on the calendar with Fidelity and Guaranteed, F&G. So I'm sure we'll be doing a couple of them, but those dates are not yet announced. But what it is it's a great opportunity for agents who are active in the life and the annuity market, doing business with IMES, to come out and get some in-depth training. It's not Annuities 101. It's not Life Insurance 101. It's how can we help you grow your business? Let's show you some unique techniques, some niche products. We're going to bring in some of our top producers, and they're going to say, hey, here's my full marketing program. Here's what I do. We're here to help you grow. And at IMES, we're a big family. And so even our top producers are willing to come out to these events and help strategize with you, help put together a plan with you to help you grow your business. So I will say, let's throw out the second poll question. If you're interested, maybe not this year, maybe next year once things settle down a little bit, but you guys are interested in coming out to one of these, answer yes to the question. This is going to send you a pre-registration link. This does not guarantee you a spot. I will say that right now. But what this does is let us know you're interested. So when we do get those dates on the calendar, we do know when we're going to be doing it. We can reach out, let you know when and where we're going to be doing this. I will say that you do have to be contracted with whatever carrier we're going to co-sponsor it with, and that contract does have to run through IMES. And I will tell you that we give the people who are writing business with IMES priority. So if you're writing business actively through IMES, you would be on the first to be invited. So we don't have a production requirement. We don't require production, but our producing agents are going to be the first to be invited. So with that, if you are interested, again, the quicker we answer these poll questions, the quicker I get to move on. So if you haven't answered that, just go ahead and answer yes or no to the question, and we'll go on to the next slide. Alrighty. Next, we're going to talk, last thing I'm talking about before we jump into product is trips. Everyone loves trips, right? Well, we're lucky enough to have a relationship, very good relationship with Athene. So much that they do a co-sponsor a trip with us. So I will say there has been a little bit of changes to this due to the lovely COVID. But $3 million guaranteed, you and your guest a spot. We were going to be doing it down at the Montage down in Cabo. I will tell you that I just found out this morning that they did postpone that trip. I don't know that it's necessarily going to be in Cabo now. We may be looking something more in the U.S., first of all. But then we're, kind of waiting until things settle down. But probably late October, early November is when this trip will be rescheduled. So announcement hasn't been made yet, and I wouldn't say it on the record too far yet, but it looks like we'll probably extend that qualification period. It was supposed to end at the end of June. We'll probably extend that maybe out till September, and then hopefully do the trip in October or November. So $3 million gets you and a guest on a trip for 4 days. It's going to include golf. It's going to include lots of fun, spa. It's really a good time for Athene and IMES to partner together and say thank you for the business you do. So $3 million, I will say that is Athene production only through IMES. So $3 million with Athene through IMES gives you and a guest on this trip. Now, for those of you who maybe aren't writing Athene or just writing other business with IMES, good news is we have another trip as well. This is our big top producers escape. We do these every 18 months here at IMES. $3.5 million gets you and a guest to Mexico, March 7th through the 11th. So again, $3.5 million of trip credits is what we say. So how trip credits work is annuity is dollar for dollar. Life target premium, I think, is like 11.5 to 1. Single premium life is like 1.3 to 1. So even Medicare business counts. All the business you're writing for IMES earns these credits. $3.5 million gets you and a guest down to Mexico in March. As of now, this is still on the calendar. We're not planning at this time at canceling it. And you have all the way till December 31st to qualify. We're going to piggyback that Mexico trip with kind of our elite program. So we're going to take the top 15, 20 guys over to another island down in Mexico, the 11th through the 14th. $6.5 million qualifies you. $8.5 million guarantees you a spot. Again, we're looking to take our top 15 guys, maybe 20, depending on how many qualify. But again, it's just a great time for us as an IMES family to treat you out to golf, spa, relaxation, drinks, whatever you guys want to do. Just really have a good time with you guys and say thank you. Really try and make you part of the IMES family. So really excited about these trips. If you're curious where you stand, give your marketer at IMES a call. I know we've got the numbers through April. The May numbers should be out here in the next week or two. So really a great time. I have a lot of guys who go on one of these trips, and I don't know if it's them or their wives that say, hey, we're not missing another one of these. So it's really a great time. I've been on many of these trips myself, and it's really great to see all the IMES agents come together and just really, being a family and hanging out together. So if you have any questions, again, give your marketer at IMES a call. All right, so let's get into what we're talking about today. Again, I don't know if everyone joined in late. Some people have. Can everyone see my slides now? Someone was saying that they couldn't see my slides. And I just want to make sure you guys can see them. If someone could just type back to me in a question. Okay, perfect. We're good to go. Again, save your questions. I'm going to go through 3 products pretty quickly today. I know there's going to be some questions. Jot them down on a piece of paper, because what I'm going to do after the webinar, later today or tomorrow, I'll have my assistant send out all the marketing materials on the products we cover, but then also I will follow up with each of you individually to answer any questions you have. So again, why are we talking about increasing income? Well, here's why. It gives the clients the opportunity to have some better income opportunities, number one. I truly believe in the fact of increasing income is really good because it helps clients keep up with inflation. I mean, if you look at a gallon of milk 5 years ago and look at today, big difference. Look at gasoline 10 years ago and look at it today, Inflation is something that's not going to go away. It's something that we're going to consistently be dealing with. And if we can give clients the opportunity to have some pay raises during retirement, I think that's a great conversation to have. And if you haven't noticed, it's increased competition in the marketplace. I'm seeing new products developed all the time with increasing income. More and more carriers who maybe don't have it are realizing they need to get on this bandwagon real quick because everyone else is already there. So we're seeing new products developed all the time. what the client can expect from this, the opportunity to have increasing income. We're going to show, I think power to retain control of their assets is a big one as well. The example I always use is, I actually had this happen the other day. An agent called in and said, hey, I got a client who needs a SPIA. We need immediate income. I said, okay. I ran the SPIA numbers. I said, but hey, before we get off the phone, let me run this on my annuity rate watch and see what's going on. Well, it came out that the SPIA was this was on like a 64-year-old too. The SPIA was going to kick out like $18,000 a year. The income annuity actually came in at $18,500 for the best guaranteed income. And then the product I'm going to show you here in a little bit came in about $500 less than the SPIA. So the question to the client is, are you willing to give up $500 a year at first for the opportunity to have increasing income for the next 10 to 15 years? I guarantee if you break that $500 down to a monthly amount, you're not going to hear no very often. Because you'll see when we look at some of these illustrations, the power of increasing income. But not only that, but the client retains control. You put your money in a SPIA, you're signing your destiny away on a dotted line. It is what it is. It can't be changed. You can't reverse. It is what it is. Whereas if we're putting it in a fixed index annuity with a lifetime income rider, we're going to leave that control in the client's hands. Grandma wants to take all the kids to Disney and take an extra $10,000 out of her policy. Yeah, it's going to screw up her income next year a little bit. But guess what? She has the capability to do that. She still has control of her money. She decides she doesn't want income, she can shut it off. There's a lot more opportunity to have options if you're using an index annuity versus a SPIA. And then also they're going to have an income that won't outlive their retirement. It's guaranteed lifetime income. So it's not something that they're going to be able to outlive. Like I said, inflation's the reason we're talking about this. You can just see here, every year, there's only a few months you see a negative. Inflation is something we're going to continue to see be a problem. All right, so we're going to look at three different products. Now, what I'm going to say about these three products is it's all about time and place. There's going to be a time where each of these is more competitive. There's going to be a time where one may look better than the other. But it's all about knowing your products and knowing when they're going to fit in for what the client needs. So the first one we're going to look at is Athene's Ascent Pro Bonus 10. Before I jump into this, I will say some people may know some products out in the industry that are more like long-term deferrals, looking for income in maybe 10 years with increasing income. Good news is I do cover that as well, but I do that at the end of every month. So today we're going to be looking at income either right away or maybe in a couple of years, whereas some of the products we'll look at later in the month when I do my other webinar will be those longer deferrals. So number one product, Athene Ascent Pro 10 Bonus. Athene came out with this product 4 or 5 years ago. It hit the industry and was a very popular product. Since then, they have dropped some rates just a little bit on this product. It's not quite as competitive, but if we're looking for that increase in income, they have a place here. The minimum on this product is $10,000. Issue ages are age 35 to age 80. The rider fee on this product is 1%. On this product, you do have to wait 30 days after issue, and then you can turn on income, so you really can get close to immediate income in this product. It works for both qualified and non-qualified money for both single and joint. It is single premium, just so you know that as well. I'm going to go back to that qualified joint payout. People ask me about this all the time, thinking Mr. Jones has $500,000 in his IRA, wants a lifetime income, but he can't add his wife because it's qualified money. That's wrong. We can add her on. The way we're going to, as you all know, we have to move money like to like. So it's got to go from Mr. Jones's name to Mr. Jones' name. But he can name Mrs. Jones as his primary beneficiary. And then when he elects to turn on income, if she is the spouse and the primary beneficiary, then we can allow for a joint payout. So it is possible. I get that question all the time, so I just wanted to reiterate that, because you're going to notice on all three products we look at, it's the same situation for qualified money. So again, I just like to point that out to people because that is a question that comes up a lot. So with this product, there's a lot of different options, but the best way I could explain it to someone is saying, hey, you get two choices in this product, okay? Number one, we're going to pick out how the account's going to grow. And then we're going to talk about how it's going to pay out. So really the client gets to do two choices. Now, how it's going to grow, we have to pick at time of application. How it's going to pay out, we'll talk about here in a minute. You don't have to decide that till you activate the income. So how the account's going to grow? They've got both a guaranteed and a guaranteed plus a multiplier. We're not really here to talk about the guaranteed. It's there. It is what it is. But what we really want to focus on is this multiplier effect. Before I jump into the breakdown, sorry about that on my screen, breakdown of the strategies real quick before we dive into some illustrations. But Athene has also just revamped their strategies on all their products. They've still got S&P, both regular S&P and daily risk control. They've got BNP Paribas, which if you've got any clients in this strategy, you've been seeing a lot of double digits towards the end of this year, middle of this year. So that's been really a nice return. And then they just recently got rid of Morningstar and Janus, and they brought in two unique strategies. So we've got the NASDAQ, very common name. If you look at the NASDAQ, I haven't looked at it today, but yesterday, I think it was up close to 12% on the one-year return, which is phenomenal. And then they also added the APEX, which is Artificial Intelligence Equity Index Strategy powered by IBM Watson. So we all know that technology is taking over our world. It is what it is. It is part of life. But with this, the APEX is really unique because it hones in on 1,000 of the largest U.S. companies, and it scores them based on their health, their management, and their finance, okay? And then they score these top 1,000 companies and invest it into just the top 200. So using technology, being able to look at which companies are scoring well in these three different categories and then invest the money in those things. They are both rebalanced on a daily basis, so that's really nice as well. All right, so now that we're through the strategies, let's go back to the product. Like I said, you have a guaranteed option and a non-guaranteed option. Just so you all know, the guaranteed option gives you a 10% income bonus day one and grows at 10% simple for 10 years and then goes to 5% simple years 11 through 20. Okay, not too exciting. Let's talk about the exciting stuff. Option two, you're going to get, option two has a 7% simple roll-up guaranteed, but on top of that, you're going to get 200% participation. So let's just say that, for example, that your client earns 4% interest, okay? I feel like that's pretty conservative. 4% is doable. So we're going to do 4% times 200% participation, which would be 8. We're going to add 7 to that because we got a guaranteed 7 as well. Your client just got a 15% roll up that day or that year. And that's how it's going to go. So if you can see here on this graph, I really like this graph. You know, this blue line is our guaranteed for option two. You see it starts just a smidgen behind the yellow line. Again, that's because it has a little bit less of a bonus. But then here you'll see the yellow line is that guaranteed one where 10% simple for 10 years. It's a straight line. It is what it is. When you turn it on, it is what it is. But what we want to look at is this 200% participation. So look at these dotted lines. So even in the worst case scenario, our income account value over 10 years grew to 240 instead of 210. That's in the worst case scenario. Look at the positive side. We're looking at growing it up, 60,000 higher than the guaranteed. It's the power of, participation, having that multiplier effect. Multiplying interest and adding that guaranteed rate really can boost up and give the client some really nice benefit base to work with when it comes to turning on income. All right, so that's how so first for option one or option two, option one is going to be your guaranteed, option two is your guaranteed with your multiplier, okay? So that's what the client has to choose when you fill out the application. Now we're going to talk about how it pays out. Oops, I don't know what I did. Hold on, I put a timer on this. All right, let's go back a slide. All right, how it's going to pay out. We got 3 options. You can do level. It is what it is. Predictable, hey client, sir client, you're going to get $82.95 every year for the rest of your life. Never going to change. It's never going to go up. It's never going to go down unless you take too much, take an extra free withdrawal. It is what it is. We don't care about that. We're going to look at, this is my favorite, is the earnings index. Earnings index meaning every time the client earns interest, they get a pay raise, okay? So 4% interest earned equals 4% bump in your pay. As easy as that. One thing I will mention, and I'm going to talk about payout percentages a lot during this webinar, but Payout percentages are so important. You can have the biggest bonus and the biggest roll-up and be nowhere near competitive when it comes to income because your payout percentage wasn't there. We could have the small, I use this, I was running illustrations the other day, and a product with no bonus and 4% simple won in an income battle we were doing. And it was only a 4% roll up and it had no bonus. But guess what? The payout percentage was stellar compared to anyone else. That's why that company won. So payout percentages are super important. When we're talking about increasing income across the industry, I'd say 98% of them have 2 payout percentage grids. You're going to have one if you want level income, and you're going to have a lower payout percentage for the increasing income. Okay? So I just like to remind people that payout percentage is going to be lower. So we are going to start behind the level to start with, but look at where we're going to go. We're going to go up. Instead of being stuck at $82.95, we're going to start at $7,000, which, yeah, that's quite a bit lower. But look at just over a 10-year period, we grew their income by $2,700. It started out at $7,000, but even in the worst case scenario, over a 10-year period, we grew it $1,900. So that's the power of increasing income. And I can't explain how many times I get that phone call. I went through a statement with someone the other day. An agent called me. We did kind of an overview of the statement before he was meeting with the client. The client earned 16% last year. They got a 16% increase in their income. Those are the kind of conversations we like to have with clients, right? I'm not saying that's going to happen every year. These are indexed annuities. It is what it is, but I mean, the possibility in these products is really great. I mean, if you get a couple good years, you're going to blow that guaranteed income out of the water. So I think it's really important. Athene does have a third option as well. Again, this is the earnings index, my personal favorite. They also have one that's based on inflation. So as you can see, we're going to start way, 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 way low. Payout percentages, again, very low on this. I don't really use this because of those payout percentages. But the way that this one grows is every time that we see an increase in the CPIU inflation index, your client's going to get a pay raise. Well, we just looked at an inflation table and I think it went, 10 years back, and there may be 5 negative numbers on that out of all those months we looked at. They're going to see consistent pay raises. But again, those payout percentages are going to start you pretty low. So the illustrations I'm going to show you now are going to be, I ran these option 2 and in earnings index. So I'm using that multiplier effect, and then using the interest is what's going to grow it. Now, when we're doing illustrations, I always have to show you a guaranteed, so it's not exciting really. It is what it is. I will say this product does give your client a 3% bonus. If you see up here, it says premium bonus $15,000. Because they do get a little bit of a premium bonus. So if we're covering a little surrender charge or something, we can make it work. So on a guaranteed basis, can't really talk too much. You can see the income base does go up by that 7% simple every year. But let's look at the non-guaranteed. No matter what happens, like I said, time and place. Since the thing does give you that 7% simple with the 200% participation, I think this is good for that client who says, I probably need income in about 4 or 5 years, maybe 6, but we can't make it to 10, and we don't want it right away. We're going to look at products for those spots, like I said, later today and at the end of the month when I do my other webinar. But I think this product is for that bubble of, 5 years out or so. So what I did is I used $500,000, did it on a 65-year-old taking income at age 70. $26,950 we can guarantee no matter what. Okay, now let's look at the non-guaranteed. With this, again, I illustrated this pretty conservatively, 3.55% interest, as you can see up in the top corner here. Not sure if you can see my mouse, but there you go. You can see that this income base went up a lot quicker, right? And then we, instead of 20, whatever it was, 26, look, we're at 32. Okay, and then not only that, but look at this income account. Every time we earned interest, it went up. Now, I'm sure someone's asking why it only goes up every 2 years. I'm assuming my assistant ran this illustration using 2-year strategies, which I fully believe, I do a lot. A lot of times my strategy with Athene, because they do have all their indexes with 1-year and 2-year strategies, is I split the money in 1 year and 2 year, 25, 25, 25, 25, split it up. So 50% in 1 year, 50 in 2 year. And on the first anniversary, I switch all my clients to a 2-year strategy. The method behind that is we all know that the 2-year strategies have much higher participation rates, right? So moving it to the 2 year after 1 year, our 2-year strategies are hitting every other year. So we kind of have them laddered within the policy, which is going to lead to better returns overall. And, hopefully the clients see a pay raise each year then. But that's why it only illustrates, usually for illustrations, we'll do it in 2-year strategies because ultimately that's where we're going to end up. But anyway, pay raises every time you're in interest. Look, even after this cash account hit 0 here at age 83, we're still getting pay raises. That's the power of increasing income. Some products we'll look at are going to cut off when accumulation value gets to 0, but other ones will keep going. So again, I think it's a really good conversation. I think a lot of agents steer away from increasing income because it's a little more confusing to explain to a client. It's easier to say, hey, Miss Client, you're going to get $10,000 every year for the rest of your life. Hey, Miss Client, how about we start at $8,500 and I get you pay raises throughout retirement? Those are some objections we're going to go through, but I'm happy to go through all those with you and kind of help you talk you through those. All right, here's your payout percentages. As you can see, there's 3 columns: level, inflation adjusted, and earnings index. So if you let's just look at age 70 down here, 4.45 if we do level, 2% if we're doing that inflation adjusted, which isn't my favorite. And then we got this 3.85 for the earnings index. So we are going to be down, a little bit from the level, but again, we're going to give our clients the opportunity to have pay raises. All right, second product we're going to look at today. Probably one of my personal favorites. I'm going to probably say it 3 times as we're going through this, but AIG has a great increasing income option, especially for clients who are looking for income right away. And I'm going to tell you this right now, payout percentages with AIG are the exact same whether you do level income or do increasing income. Okay? I don't know of anyone else in the industry that has a product where they don't chop your payout percentages to have increasing income. That's a very powerful thing. And when you see the payout percentages here in a few minutes, you'll know why. Minimum premium on this product is a little steeper. It is $25,000. Issue ages on this are only 50 to 78. The rider fee, 1.1%. This product, again, you can start income 30 days after issue. Works for both qualified and non-qualified money, single and joint. And it is also just a single premium product. All right, how this product works. I think the time and place for AIG, this is the product I use when I'm competing with SPIAs or when I'm looking at someone who needs income in the first year or two, okay? Because this product completely grows based on interest. That's it. You get 200% during deferral. We're going to double your interest during deferral. So you earn 5%, you're going to see 10% growth on the benefit base, okay? Once we activate income, we're going to match. 5% interest earned, 5% increase on the income value, okay? And I'll explain this better when we get into an illustration. So again, here's just kind of a sample one saying, okay, so this is doubling, we're in deferral. Let's say 2.52 was credited interest, 5.04 was credited to the income base, right? 12.63, 25.26 would be credited. So if there's nothing earned, nothing changes. You see the values will never go down. Once your value goes up, it will not come down when it comes to that income base, okay? We'll jump into some illustrations here in a minute. And then again, we're going to show matching. So, let's just say we turned on income right away, right? So we've got $4,800 is what this annual income supposedly is going to be at right at first, okay? They're looking at a 65-year-old here. Okay, they earn 2.52 in the first year. They're going to credit that 2.52 to this income base. So your payout percentage at 4.8 is going to stay the same. You're still getting 4.8, but instead of 4.8 of 100,000, you're getting 4.8 of 102,520. Okay, look at, we got a pay rate. That's how this product's going to grow. And again, we're going to look at a full illustration here in a minute. This is probably my favorite a picture tells what, 1,000 stories or something like that, they say, right? So I think the picture lays it out. And I think anyone who goes to meet with a client, this is the one to use. I'm pretty sure it's in the brochure as well, which is great. But I think this tells a whole story in a picture. So here's how it goes. I'm going to tell you first, this little purple dark blue line is your cash value. We're using this $100,000. 62 is where we're starting. And you'll see the line gets a little darker here at age 67. That's where we're going to turn on income, okay? So 3% interest earned year one. Up here you see 6% credited. 0 means we just stayed the same. Here we did 4%, so we got 8%, right? It keeps going. Then we get to here where we turn on income. Now we're to the matching stage. 4% interest earned equals we got plus 4 over here. Had a couple of years of 0, it looks like, so we stayed the same, okay? We matched it, okay? Now, with AIG, when the cash value does hit 0, we stop growing, okay? But in this instant, we turned on income at age 67, so we gave that client 14 years of increasing income, okay? Once this cash value hits 0, whatever this income is that you got, the highest one, that is now your new income for the rest of your life. So I think, like I said originally, a lot of guys have trouble with these products because it's more confusing. I get it. I have to explain it all the time to people. But I think if we can show them a picture, Miss Jones, this is how it's going to work, I think it just makes it a lot easier. AIG has a lot of great indexes as well. They've got Russell 2000, S&P 500, like you all know. Those have been around for a while. A couple others that they've got recently. Well, Merrill Lynch Strategic Balance Index, this has been added to their products probably about 5 years now. And the first few years people use this strategy. I heard a lot of negative things about it, but anyone who's renewing in it now is singing my praises for telling them to allocate to this. It's a combination of stocks, bonds, cash. It's got a lot of S&P in there mixed with some 10-year Treasury stuff. So, right now, I looked at it yesterday, the 1-year return right now, even with all the bumps in the road we had in February, March, the 1-year return is still sitting over 12% as of today. I had an agent email me. It was right after the big crash, or one of the little hiccups we had. Called me and said, Laura, can you please explain how the heck my client made 8%? And I said, volatility controlled. These are volatility controlled indexes. So when we get really volatile, they slide to cash, protect us from those downsides. Yes, it may take away a little bit of the upside, before they move back out. But if that's the nice thing about volatility control. This is also the index that my client earned 16% in. So, again, really nice strategy there with Merrill Lynch. They've also got this PIMCO Global Optima Index. So every time I say PIMCO, people say bonds. It's not just bonds. It's global stocks. It's got emerging markets, international markets, U.S. small, large, mid-cap as well. So it's a good global index. What's really unique about the PIMCO Global Optima Index is that it is a total return index, meaning your client's going to earn those dividends in that strategy as well. Being that it is a global index and it is total return, we got a lot of ups and downs. This is going to be your home run hitter. It's not going to hit every year. And when it does hit, it's going to probably be pretty nice. But we're also going to see that the spreads and the participation rates on this, participation rates very low, or the spread's pretty high. That is due to it being total return and you earning those dividends in that strategy as well. So very unique strategy. Right now, I'd probably be putting my money into PIMCO because it kind of tanked with everyone else. And so it's going to be doing its work back up over the next couple of years. And then we've got AllianceBernstein, the All Market Index. This is global stocks, global bonds. It's a really great new strategy they've recently added on. It's got volatility as well, got high participation rates, low spreads. Again, this one didn't tank as much as PIMCO, but it's down there. The 1-year return's around 1.8 maybe right now, so not great. But again, in a year or so, we're going to see that creep right back up. So it's just a nice combination of strategies here as well. And anytime you want to jump into more of these strategies, I can get you out the brochures on each one, get you out their microsites, get you their ticker symbols, all that. So, all right, let's look at an illustration here. Again, I said this time and place for this product is wanting income and wanting it right away, right? So what I did is a 70-year-old turning income on right away. Again, I got to show you the guaranteed. So assuming zero interest, there's nothing exciting about this. It is what it is, right? $27,750 guaranteed every year, and that's the end. Okay, so I am going to show you this now, which is when we throw in some interest. One thing I'm going to point out before I start going through this is if you look here, people always go to this interest credited and freak out a little bit because I only show 2.27. And then I want to remind them that years 16 through 25 are all zeros. So if we take away 10 zeros, we're actually illustrating this about like we did a scene, 3.5% to 4%. Okay, so I'm doing these very conservatively. I don't want to overpromise and underdeliver. So again, we're going to start exactly the same. Why? Because our payout percentages are the same, regardless if it's level or increasing. And this is how it works. It shows each index here, but here we're going to look at this interest credited line, and we're going to look at this income base, okay? 5%, or 500,000, we are 4.25, okay? 4.25 is not only credited to our accumulation value, but this is going to go down because we're paying fees as well, but you'll see that this, 500,000 was credited 4.25, so now we're at 521. You're going to have the same payout percentage, just on a larger amount. So this income base is going to keep, every time we earn interest, is going to keep going up, even on years where all three indexes were negative. Let's look here at age 79. Merrill Lynch was down. PIMCO was down. Alliance Bernstein was down. Nothing was credited. Client says, oh, am my income going to go down? No, your income would stay the same. So it's literally, when you earn interest, it goes up. Otherwise, you're staying the same. Once this cash value hits zero, we're locked in for the rest of our life. So yeah, again, increasing income. I think this is a good spot for earlier income, and then it'll also give the pay raises. On all these products, by the way, if I didn't mention it before, it's cash value at death. So if there is any sorry, just a second. Someone from the office was messaging me. If there's any cash left in the account at the end of the when the client dies, any cash that's left will be paid out to the beneficiary. If you elect for a joint payout percentages, I believe, are about 50 basis points less. Yes, but as you can see here, 70 years old, we're looking at a 5.55, payout percentage. That's very competitive. Even having it over 5% with 2 lives. Now, it will base it on whoever the youngest age is how we determine the payout percentage. So, again, very competitive. And as you can see, we don't have one for their guaranteed income and they're increasing. It is all the same, which gives them a very large lead when it comes to increasing income for right off the bat. Now, I will tell you, they're not the most competitive right off the bat. It really depends on age. For the older clients, we're pretty close. Maybe, $100 off a year or a month. But it's the client, again, it's Miss Client, are you willing to give up $100 a year to have increasing income for the next 15 years? 10 to 15 years is what I say, but I haven't been told no. So that's how you position it to the client. All right, third one we're going to look at, North America's Income Choice 10, $20,000 minimum on this product. Issue ages 40 to 79. Here's the exciting part. There's no fee. We have no fee on this product. You can start income 1 year after issue. Qualified, non-qualified, single, and joint, all available, and it is flexible premium. So that is nice. What I think about this product is this is for that product, for that client who says, well, I think I'm going to want income, but I really don't know. It's not my number one goal. They just don't really know what they want. I think this is a good opportunity. The way this product works is you're going to get a 2% bonus on anything that goes into the benefit, 2% bonus. And then you're going to grow at a guaranteed rate of 2% plus 150% of interest earned. Okay? Let's just say we earn 4% interest. Okay? 150 of that would be 6 plus the 278. We would have had an 8% roll-up that year. I really like this slide because I think it helps tell the story. One other thing clients get so confused about is accumulation value versus income value. Why do I have two values? This helps paint the story in a picture. 100,000 goes in, we got 100,000 in both, right? We get that immediate 2% bonus. So again, clients often be told, I get clients that call me all the time. Hey, I need that product with a 20% bonus. I'm like, okay, but that bonus is on the benefit base. No, my agent said it was on the cash side. No, it's on the benefit base. So I think it's important to understand that the clients are very confused on this. So with that 2% bonus, our benefit base is 102, our cash value 100,000. Okay. And then we're going to show some interest here. So they did 3% interest earned. So 3 times 150 is 4.5 plus the 2, so 6.5%. So after 6.5% growth, our benefit base now is 108. And guess what? We earned 3% interest, so our cash value is 103. So I think it just helps paint that picture a little bit better, black and white, for the client, understanding that if you die, your beneficiary is getting 103. If you turn this into income, we're going to use the 108. So I think it's just another picture. North American, is very traditional based. They do a lot of S&P strategies, both traditional ones and volatility control. If any of you have any clients in North American and they've returned recently on this S&P Mark 5 excess return, your clients saw some really nice returns this last year. All right, here's your guaranteed page again. I think this is for that client who doesn't really know or is very fee adverse. No fee on this. Hey, we can give you an income. We can give you an increasing income, and you don't have to pay a fee. Hey, that's pretty good. It's not the most competitive, but that's okay. We didn't pay anything for it. So we're going to do 500,000 in this, and like I said, there's a 1-year wait on this product. So what I did is I showed income after 1 year. 500,000 in. Well, this is guaranteed. Guaranteed, we can do 21,588. And then here's the non-guaranteed, okay? So hypothetically speaking, I illustrate this pretty conservatively, just over 4%. But, using that S&P Mark excess return, in the first year, if 10% was credited like it was in this illustration, 16% would have been credited to the benefit base. We just took that benefit base from 510,000 up to almost 600,000, right? And because of just 1 year of that kind of interest, we went up from the guaranteed of whatever it was, 21, up to 24. Not only that, but look at this. Every time they earn interest after, it just keeps growing. So again, the power of increasing income, I think it's a very good conversation to be having with clients. And again, this is a free option. North American's an A+ rated carrier. They've got some very good strategies that have been performing very nicely. So again, this is nice. Now they can do this as a level income, but then also they can do it as increasing. I ran this with increasing income. And here's the payout percentages for North American. You'll see they do have 2 percentages, but again, look at that age 70, we can do level at 5.05, or hey, we didn't know if we wanted the income anyway, let's do increasing with that 4.05, the opportunity, again, for those increasing income. With that, you guys all did well, not asking too many questions here, but what I will do, like I said, Alex Gayton in my office will send you all out the materials on these products later today, first thing tomorrow. So be watching for that email. If you don't see it, check your spam folder. And then I will follow up with all of you guys individually to see what questions you have. If you have any immediate cases you need help with, give our office a call. Marcus, whoever you're working with, Matt, Scott, Lisa, we're all here to help you. And I appreciate you taking time to come out and join me today. So with that, hope you all have a great Thursday, and we'll talk to you soon.